Folks, America is being tested. Households are drawing down on their savings. They're increasing credit card use. Refinancings are down 77%, so much for using your house as a piggy bank. Credit availability, you just heard from Matt Yardeni, that's dwindling fast. This is 2/3 of the economy, of course, is the household, is consumer spending. So what does it mean for the markets? I want to bring in Michelle Snyder. And Michelle, I want to just start. The consumer, is the consumer strong enough to weather this inflation/recessionary storm?
Probably not over the long run if things continue the way they are, which at this point I don't see any reason why that should change. One thing is that we already know many Americans live paycheck to paycheck. As you just mentioned, mortgage rates have pinched, interest rates higher have pinched, and inflation, even though demand destruction has taken place to a degree, doesn't really look like it's going to abate anytime soon. And of course, it's not just the United States. It's globally inflation, which of course trickles back to us. So I would say that although we still see the consumer debt as a ratio to GDP not at critical levels, that's something to watch for. At this point, though, just looking at the market, the consumer sector is bouncing, but not very convincingly.
So then what does it mean with respect to the recession question? That's sort of like the sword of Damocles hanging over this market right now.
Well, I've always felt that maybe this recession would be a little bit different looking. From a textbook standpoint, of course, 2/4 GDP lower, that's in recession. But we do have a couple of things going for us. The housing crash that we saw in 2008, we're not going to experience anything like that, because why would anybody sell their house for a higher interest rate right now? So we will still see somewhat of a strong demand relative to inventory. And then labor, yeah, we're starting to see layoffs. That could be a factor going forward. So this is where stagflation keeps coming up over and over and over again. We can stagnate. We can have blips up and down. But it's really going to be, as I'll say over and over again, inflation that we really have to watch out for, regardless of what the Fed is doing.
So last time you were on, we talked about energy a lot, maybe buying some of those stocks on a dip, also alternative sources. Are you still a buyer there?
Yes, actually, we really like oil services right here. They dipped right down to a great chart support, so you have a very low risk trade at these levels, particularly if you want to look at the ETF OIH. If XLE hangs out here any longer, we will actually get a signal in our quant models to go long there. And just in terms of pure energy right now, regardless of all the news about trying to release more oil and doing a tax credit, there's still a very low amount of reserves. And if demand goes up any higher, which it probably will, that's going to put pressure on how much oil there is, and that'll be inflationary as well.
Michelle, I want to ask you about a piece I read from you. I think it's CMC Markets. You said America and its middle class are being severely tested right now, and that possibly we have seen the last big stock market rally for many years to come. Now, you posed it as a question. You didn't really give an answer, but do you know the answer?
Well, of course, the crystal ball answer, but when I'm alone with my thoughts and I go over this over and over again, it really seems to me right now that the answer is that we could have a rally. We're having a rally. In fact, last week, actually, you and Charles and I talked about 360 as the support in SPY. We got close, and now we're testing that 380. So we can see these kind of rallies, but in terms of big bull run, I do believe that we are not even at the start of a super cycle at commodities. Things have been so manipulated, and then we have the dollar as the X factor in this, which is coming down from its highs too. So yeah, I believe that we can stagnate for years. I'll say conservatively 1 to 3, but that doesn't mean there isn't opportunity. There's always opportunity, and that's where you have to look at some of these commodity-related stocks and commodities in themselves.
Okay. Hey, Michelle, thank you very much. Appreciate it. Very thoughtful piece. Appreciate it. All right, folks.
Thank you so much.